there. Welcome to our very first live stream for Landscaping Pros. My name is Tasha, and I'm the founder of West Financial Services LLC, and I'm looking forward to being here with you live. The goal is weekly, fingers crossed, just to bring some value when it comes to navigating the financial side of your business. So, with us about to enter the last quarter of the year, I wanted to talk to you a little today about how to know if it might be time to convert your business to an S-Corp. I work with several clients in this industry, and what I've seen more often than not is that they come to me in the beginning having paid thousands of dollars of their hard-earned money in self-employment taxes. And guys, self-employment taxes are a huge profit killer. I'm not sure if you've experienced getting that tax bill at tax time that was like a punch in your gut, but if you have, you know what I'm talking about. But if there was a simple tweak that we could make to your business structure that would put those dollars back into your pocket, would you be interested? I mean, this is something that wouldn't require you to take on any extra jobs or hire any extra employees to make that happen. And so that's what we're talking about today. I want to break down exactly how converting your landscaping business to an S-Corp works and show you the actual math on how much you could save doing that. So first, I want to cover how your business is taxed. If you're running your landscaping business as either a sole proprietorship or just a regular LLC, you're going to be paying self-employment taxes. Now, that's different from your normal income tax. Self-employment tax, those are paid in addition to your normal income taxes. So your self-employment taxes cover your Social Security and Medicare contributions, and they total 15.3% of your entire net profit. So if you just stop and think about that for a second, what that means is for every single dollar of profit that you make, before you even start thinking about paying federal or state income taxes, the government expects to take 15.3% right off the top. So let's go through an example, right? So let's say your business is just a standard LLC, and let's say you had a pretty decent year in business. And after all of your expenses, like your fuel, equipment, your workers, and so on, your business had a net profit of $80,000. That's a pretty good year, right? But since you're operating as a standard LLC, you owe 15.3% in self-employment taxes on that entire $80,000. So doing the math, that's $12,240. That's money for a new zero-turn mower, a nice down payment on a new truck, or even, hey, a much-needed vacation in the off-season. But instead, it's vanished. It's gone to pay your self-employment taxes. Now, the first thing to get straight is that an S-Corp, it isn't a different type of company that you'll need to start from scratch. It's actually a tax status or an election you file with the IRS. And when you file this election, you're telling them you want your business to be taxed under a different set of rules. When you elect S-Corp status, the IRS sees you separately from your business. You become an employee of the business, whereas when you own a standard LLC, you and the business are considered one entity. And so that's why your entire net profit is subject to those self-employment taxes. Now, once you elect S-Corp status, you officially put yourself on payroll and become an employee of your own company. That means you have to pay yourself what's called a reasonable salary for the actual work that you do, whether it's managing the crews, quoting jobs, or even running the equipment. So your salary is going to get paid through a formal payroll system, and you'll have normal income taxes withheld just like every other employee. But the great part is that any net profit that's paid out to you as a distribution is not subject to self-employment taxes. So this is how you're going to legally and ethically slash your tax bill. You're splitting your income into two buckets: a salary bucket, which gets payroll taxes, and a profit distribution bucket, which doesn't. All right, so let's circle back to our earlier scenario where you finished the year bringing in $80,000 in net profit, but this time we're going to do the calculations with you having made the S-Corp election. So we're going to say that based on industry data, we'll determine your reasonable salary to be $40,000. Okay, so the business is going to pay you a $40,000 salary through payroll. That 15.3% self-employment tax, which now is called FICA tax when you're an employee, but it's the same rate, that's only applied to that $40,000 salary. That self-employment or FICA tax bill now comes out to $6,120. That's half of what it was before you elected to become an S-Corp. Now, what about the rest of the money? The business started with $80,000 in profit and paid you a $40,000 salary. That leaves $40,000 in profit still inside the company. You can take that $40,000 as a distribution, which is a payout to you as the owner, and there's no self-employment tax charged on that $40,000. Okay, so let's slow down and think about it. In this scenario, as a standard LLC, you were paying $12,240 in self-employment tax. As an S-Corp, you were paying $6,120. So you saved over $6,000 in self-employment taxes for the year. You did the same amount of work. You didn't add a single client, or you didn't add an extra work day. You just changed how your business is taxed. And as your profits grow, so will those tax savings. So let's talk about how you'll know if the S-Corp election is the right move for your business, because it's not going to be the best choice for every business. So one thing you'll need to consider is your business making consistent profit, right? The guidance in the tax world is that the tax savings from an S-Corp really kick in and make sense once your net profits are consistently hitting around $40,000 plus a year. So that's not revenue, that's net profit. And so that doesn't mean that a business profiting $20,000 or $30,000 a year wouldn't see savings, but at those profits, the extra costs of running an S corporation might cancel out those tax savings. Another thing we need to consider is, are you ready to run payroll? Because as an S Corp owner, you are required by the IRS to pay yourself that reasonable salary through an actual payroll service. You can't just move money from your business account to your personal account whenever you feel like it. The IRS is a real stickler about that, so you'll need a service like QuickBooks Payroll or Gusto to make that happen. Third, you have to pay yourself that reasonable salary that we just talked about. The IRS says that your salary should be close to what you pay someone else to do your job. You can't pay yourself just a tiny $10,000 salary on a $150,000 profit just so you can dodge taxes. That's a huge red flag for the IRS, and they will notice. And lastly, when you elect to become an S corporation, you need to prepare for more paperwork and some additional costs. Running an S corporation means that you have to file a separate tax return for the business. You'll also have to handle some corporate formalities like holding an annual shareholder meeting and keeping records of those meetings. And then those extra compliance steps and payroll services can cost you anywhere from $1,000 to $3,000 a year. But once you hit that profit level that we spoke about earlier, the tax savings are going to blow those costs out of the water. So, I know this was a lot of information. So to help you get a clear picture and remember all of the things that we talked about today, we do have a free guide that's titled, Is It Time to Switch to an S-Corp? And you can access it by clicking the link in the chat if you're watching live. If you're watching the replay on Facebook, just click the link in the comments. And if you're watching the replay on YouTube, then click the link in the video description. So to wrap up today's live, here's the reality. As your landscaping business grows and gets more profitable, your tax structure has to evolve with it. And if you keep operating as a standard LLC or a sole proprietor, you're basically choosing to hand over 15.3% of every single dollar you make in profit. But when you make that S-Corp election, you create that separation between you, the employee, and you, the business owner. You pay yourself a fair salary and you take the rest of the profit as an owner distribution. That's going to save you potentially thousands of dollars every single year. Now, for a successful landscaping business, this could be one of the most powerful financial moves you'll ever make. Well, guys, if you found this live helpful and want more tax and profit strategies for your landscaping business, make sure to hit that subscribe button. And if you haven't already, go over and join our Facebook group. It's called the Landscaping CEO Circle. And I'd love if you would leave me some questions or topics that you want to know more about so we can cover in these lives every week. Thanks for hanging out with me, and I'll see you in the next live.